What's a Consumer Says from Morning Consult Economic Intelligence. I'm Sophia. I'm here today with the head of economic analysis, Deni. How are you doing, Deni?
I'm doing well, Sophia. How are you?
I'm great. Today we are going to talk about a few different things, mostly the dip in the index of consumer sentiment, which started very recently, but thanks to our daily data at Morning Consult, we could see that pretty quickly. And then we'll get into a brief discussion on inflation related to our supply chain and inflation indexes. But if you haven't yet, please subscribe to our newsletter. So every time we put out a podcast, we also put out a corresponding newsletter, and I'll attach a link in the description below. So you don't want to miss that because we link all of our memos and add additional charts and background on some of the stuff we talked today about. So it's a useful thing to go along with this if you're more of a reader. But let's get into the temperature check. So, every episode, we start by benchmarking various economic indicators and measuring it with temperature. We work in Fahrenheit, we're in the United States. But our baseline neutral measurement for things is 70 degrees. So, we're going to talk about consumer vibes, consumer sentiment. So, the index of consumer sentiment I think is at a temperature of around 60 degrees. 70 is our ideal temperature, so it's a little bit cooler. We have talked about this many times in previous episodes about the history of the index of consumer sentiment and how it's evolved over time. It has never quite bounced back to its pre pandemic averages, so that's why I think it's not quite at that neutral 70 ideal level. It's a little bit muted still. It did jump up after the election, but it started to dip down again. So, Deni, you recently put out a memo on the recent dip in consumer sentiment. So, I just wanted to pick your brain on what's going on there. What did we see? When did it start? And how does it look?
Yes. I think, Sophia, it was you who called it the honeymoon is over for this turn of events. So, absolutely, the consumers have been turning more pessimistic recently about the economy. As you said, we have this daily data that we can look at every single morning, and I've started noticing this about 4 or 5 days after the inauguration, that we weren't seeing that uptick anymore. And since then, between January 25th to February 4th, we definitely do see that downturn in economic sentiment. And it's really a consistency that's really raising a bit more of the alarm bells in our minds because there is a lot of volatility to this index, um, despite the large sample size that we have over here. So it's that within 10 days, index dropping, 4 or 5 points is really what caught our attention. And of course, the timing of it all, right? So we've seen a similar uptick, within 7 days or so after the inauguration, a sharp increase in sentiment. And a few days after the inauguration, we do see a sharp decline in consumer sentiment. So pretty much the opposite effect a few days after the inauguration.
So after the election, we saw an uptick and a surge, and now after the inauguration, that's why we were saying the honeymoon period is over. A lot of it came from future expectations. So when consumer sentiment did go up after the election, a lot of it was on the future expectation side. So the index is comprised of five different subcomponents, three of which are related to future expectations. So what are we seeing here with the dip? Is it also related to future expectations, or which components are declining the most?
Yeah, so as you know, the index of consumer sentiment is somewhat weighed towards the future. It has two questions about 1 year out, one question about business expectations 5 years out. And we always like to look at these different components to get an understanding. Is the consumer feeling a certain pain for right now, for their current buying conditions, or for their current personal finances? Or is it their perceptions about the future that is changing their outlook about the economy? And similar to what we've seen post elections, In this period right after the inauguration, it's really the future expectations of their personal finances, but also business conditions that is souring the overall mood. We did see also the buying conditions dip down a little bit, current buying conditions dip down a little bit. Again, we will get into it in a little bit. It might be tied towards the inflation and supply chain aspects that we will talk. But when you look at the personal finances component of the index of consumer sentiment, you do see that uptick continuing. So the souring the mood is very much related to where people, the consumers, see the economy in the future. And looking at when this turn has happened and looking at all the different economic data that was published around this period, we had GDP releases, we had the personal consumption expenditures, and then unemployment came at 4%. We didn't really had any bad economic news in this period. So we can loosely in our mind tie it towards, consumers digesting this new change in the administration and the policies proposed by this new administration.
I was actually going to ask you that. Why do you think after, I mean, this is very speculative and up to your opinion, but why do you think after inauguration, the future mood changed when it seems like actually a lot of the policies that are being enacted were promised by the administration, especially the ones related to the economy and tariffs and whatnot. So it's kind of interesting that maybe people didn't, kind of similar to the stock market, maybe consumers also didn't believe that a lot of these policies would go into effect that could potentially harm their wallets.
Yeah, I mean, it can be tied to, you know, consumers accepting that this is happening and perhaps observing the reactions of other market players, stock market, etc.,
Hmm.
and
Yeah,
sort
because
of
the stock market
digesting
did go
the
down. Yeah.
effects of that. Perhaps that is, and I would say also the sheer amount of suggestions and policies and that was introduced, versus one is a rhetoric, one is being enacted right now.
Hmm.
That could also, that could have affected their thinking as well. Um,
Yeah, and anecdotally, I'm also thinking about I've seen some letters or, letters from utility companies saying if these tariffs do go into effect, we're going to raise your utilities by X amount. So maybe there's just more awareness or people are realizing how it will personally affect them more in certain regions that could be affecting it. Um, I don't know. I guess maybe it has something to do with that. But there's also the partisan element of it. So, has after the election, the increase in consumer sentiment was really driven by an increase from Republicans, while Democrats had a sharp tank in their consumer sentiment. Are we seeing like what dynamic when we see consumer sentiment go down today, are we seeing a similar dynamic or what's going on?
yes, we continue to see a similar dynamic in the sense that the Democratic voters, those who associate as Democrats, they are driving down consumer sentiment, and the Republican voters are sort of pushing it up. So that dynamic does persist. There is a bit of volatility, but it's still there. Um, when we first looked at this after the elections and you looked at how that flip happened very quickly after the elections, one of the things I had in mind is comparing this period against 2020, right? The previous elections. And I wanted to see how far the sentiment for Democrats fell, um, or in that instance rose, and Democrats, falling right now, and compare it to essentially the opposite for Republicans. What I've noted is that the recovery in consumer sentiment in for Republicans is a lot larger than the recovery in consumer sentiment that we've seen for Democrats in 2020. There was that sharp switch that has happened after the elections, but post elections, you know, to inauguration and onwards, we definitely see the Republicans' consumer sentiment continue to rise. By no means it is back at the pre-pandemic levels, but the space that it has covered, the increase that we've seen is quite significant.
I thought that was really interesting that their sentiment shot up so much after inauguration. So even after all of this that we've talked about, like perhaps consumers are realizing that the costs are going to be passed on to them, or maybe they didn't believe it. For Republicans in particular, they're actually feeling even better now after inauguration because this is probably what they wanted, and they're happy to see these. They think this will be good for the economy and good for themselves, so they're happier about the economy. It's just that Democrats, and to a lesser extent independents, they also tick down very slightly, are more pessimistic, I guess, after inauguration. So it's interesting that those partisan lines just keep separating more and more. And it'll be interesting to see how that continues to play out through the administration because I do think it's possible it continues to just divide, which is a little, I mean, they've always been different, but it's a little unprecedented how different they are, I think, in my opinion.
Yeah, yeah, I think, in the previous 4 years, the one exception to that divide, of course, did exist and did persist, but they did move sort of together, right? So I think one effect of that was tied to inflation as we had this sort of peak inflationary period. It didn't matter if you're Republican or Democrat, your sentiment did fall down. And then as inflation improved and the economic situation improved, it did go back up. So they did move in the same direction. It's just there's a big gap between the two of them, and that
Mhm.
gap just right now switched. So
Yeah.
it would be interesting to see if we're going to see the effects of these proposed tariffs. Well, first of all, if they will be implemented the way they were suggested, if we will see the effects of it, and if that will change the views, if we will see that sort of tandem movement between the two political party supporters.
Yeah, maybe they'll just move in tandem, but the gap will remain. Definitely something to keep an eye on. I guess while we're on tariffs, we do also track the consumer sentiment in a bunch of countries, including Mexico and Canada. So another thing that I thought was interesting was how those two countries changed. So it looks like to me that Mexico, it did tick down a little bit, but to me it could just be normal volatility in the series. But Canada definitely had a steep decline in their consumer sentiment that is a real trend and does looks like more than just volatility. So what's going on there with Canada? And we have other data also in Morning Consult that has shown a souring mood from Canadians.
Yes. So there definitely has been the two economies, the US economy and the Canadian economy, has been having sort of on a different path since the pandemic. And the divergences, if you look at it from growth rates to unemployment, is very, very visible. These are two interdependent economies as well. And when one is trying to put a bit of a pressure to decouple them, it sort of provides a shock to the
Mm-hmm.
consumer. The the economy, the Canadian economy is also dealing with some of the political aspects
Mm-hmm.
as well, that can be playing into the consumer sentiment souring. But
Mm-hmm.
as you noted, it's fairly visible here. Not as much visible in Mexico data yet, but is fairly visible in the data for Canada.
Yeah, perhaps because it's just a little bit more of a surprise to Canadians. And then, as you mentioned, the political climate there is also a little bit tougher with the instability in their government. Yeah, so that adds to it. And then we also have from our colleagues in the geopolitical department the chart showing that Canadians view the United States more unfavorably than since we've been tracking it. And so I think they're just maybe taking it extra personally since we've been such close allies for so many years. And that could be a part of it because the consumer sentiment measure is It's not just a measure of how people are going to spend or how they're feeling about the economy. It also is just a kind of a feelings measure. So there's that aspect to it.
Definitely. And
Okay,
they
well,
do follow closely, so.
yeah. Okay, I think that was a really great discussion. We're going to just talk very briefly about our supply chain and inflation indexes related to everything we've been talking about with tariffs and inflation. There's some argument about it, whether or not tariffs increase inflation by the definition of inflation, but it does increase price levels, which is a one-time increase in inflation. So, but we have some more interesting dynamics going on with our supply chain and inflation indexes that I think provide a little bit more color on what to expect if we do see these tariffs go into place. We have actually already seen them for China, so we could see them for the goods that we import from China. But I did want to get into these supply chain and inflation indexes. Please go check out our second episode ever of this podcast because we go into a deeper dive. We have more indexes than we'll talk about today, and we talk about the history of them, how they've evolved, what their definitions are, because they're calculations. Sometimes they take a little bit for people to understand the calculations, but once you get it, it's pretty intuitive. So today I wanted to talk about our a couple of our supply indexes and a couple of our demand indexes. So maybe we should start with supply. So we have a few supply indexes. I think we should start with the delivery delays index. So that measures how consumers are reporting delivery delays from online orders. The calculation is if delivery delays were slower than the previous month minus those that were faster. So when that goes up, that means there's more delays in deliveries. So we've been seeing that creeping up for quite some time, which is kind of interesting because it was quite a bit higher in 2022 when supply chains put pressure on inflation and kind of kick-started this inflationary surge we saw in 2022. But it's come down from then, but it's been going up probably for about a year or so. Slowly, it's still negative, which means there's still a larger share of consumers who are saying deliveries were faster the previous month than slower, but it's just barely negative. We might actually see it go into positive territory soon if the trend continues. Um, but I thought that was interesting. So, what do you think about supply chain pressures already starting to heat up and how that might be exacerbated by these tariffs?
Yeah, so the delivery delays, it's a very interesting, one to look at. When we put these indices together, it was in the middle of the pandemic. Majority of the U.S. consumer, perhaps more than they used to, were shopping online. So it was a really good gauge of, them getting their goods in time. We did have that long period of where this index was actually positive, meaning more people were waiting longer compared to the previous month. And then and that sort of, flipped in I want to say around 2023. Then we had this period that it's negative, right? So the supply chain troubles that we've encountered, that, as you note, that was quite crucial for inflation, sort of waned. But we have been watching it going up recently, and the timing is, I think, is the part that is concerning to us. As we talk about tariffs and price levels, we don't want that sort of threat coming in at the same time as having, already supply chain issues. And I think that's the part that is more concerning, is if we have already, shortages and delays, any sort of adjustment by companies will also add additional delays to deliveries. Therefore, will make it harder for consumer to attain the goods that they need in time. It's a very consumer centric, consumer perceived measure of supply chains. A lot of the time supply chains look at it from a supplier perspective. We're sort of looking at it at the very end of the delivery here. So if we do see tightness there, that means that there is very clear tightness in the system that should have been picked up already. And I think one of the
There was
ones
some tightness in the chain that has made it to the end to consumers.
exactly. And I think, for example, eggs, right? Because one of the indices is showing the tightness around groceries. And we know this is very well documented around the tightness and the shortages that we see around eggs right now, which probably is pushing up that index for groceries at this point. Um, so starting at that level is never a good thing because there's other threats that are sort of looming on the sidelines, especially for stuff like groceries, which are very important for consumers, as opposed to some of the more discretionary items.
Yeah. And if we do see these tariffs implemented across many of our trading allies, not just China, it will. There's a couple things that suppliers can do. They can either move to another country that doesn't face the tariffs, that doesn't necessarily need to be the US, could just be another country, or they increase their costs and pass them on to consumers. So if there is going to be some movement or reshuffling of inputs, so this could also affect US manufacturers who have inputs but manufacture at home. This will just cause some sort of supply disturbances. And I think it's just interesting to note that we're starting from a place where our supply chains are already kind of reheating from when they were really much cooler a few months ago, a year ago. And so it's not really a good thing that we're already starting from a place that's a little bit tighter than it was when it was helping out inflation and helping out that overall top line number. Our purchasing difficulty index has been more dampened than our delivery delays index, and that measures just stock outs. So if you go to the store and there's nothing on the shelf, which were really common during the pandemic when we had those severe supply chain issues. But it did take up again, as you mentioned, eggs. I think that is mostly related to eggs because we saw that increase mostly from the grocery category. But we could also see that happening if we do end up having tariffs, especially if they're on, Mexico and Canada, who we get so much of our produce from, our veggies and fruits, and then the ones in China might affect more different categories like electronics and clothing. But it just could be choking the supply chains even more. So it's something to keep an eye on. I am curious if that delivery delays index will go above zero soon, or if it's going to just hover where it is now.
Hopefully, hover where it isn't it?
The last index I wanted to talk about, which is one of our favorites, is price sensitivity. So that one reached a series high, not just for the top line number, but also the top line number excluding housing. Sometimes we like to look at both because housing is such a big category and it's kind of got its own price dynamics right now. So it reached a series high for both of those. And I thought that was also interesting because if prices do go up, there seems to be a lot less runway from consumers, a lot less appetite to deal with those higher prices. What do you think we might see in the next few months from price sensitivity, or what do you think this means for companies and the economy at large?
So as price sensitivity was increasing in the last year or so, one of the things that we've heard from a lot of quarterly calls is how consumers are now beginning to push back on these prices. And then, we've seen, $5 deal menus, etc. I'm sort of thinking of a couple examples over here. So especially in the US, there has been that recognition of, consumers do not have these savings buffers that they used to anymore. They're very much getting tired of these price levels right now. And they are pushing back. They're asking for cheaper alternatives. And so this is important because we continue to see consumers, if they're able to walk away from purchases because it's higher, the price is higher than they've expected. So that pretty much will mean more pushback against potential increases. So if the companies do try to pass on these price increases, and to an extent they will. They are sort of facing a more resistant consumer than they did back in 2018 when inflation was not at this level. We've not had this long period of high price levels. So certainly something for companies to think about as they pass on any of the costs, may it be coming from, you know, tariffs or realigning supply chains, etc. That consumer is not in the same mindset as it was back in 2018.
What comes to mind when you're saying this is that a big narrative was about these excess savings that people had built up during the pandemic and how that helped them weather through the storm. And we heard so much about how the consumer was stronger than expected and consumer spending was stronger than expected and propped up the economy as a whole. But it doesn't seem like that would be feasible, or we wouldn't have that buffer now if something were to happen like that again, because consumers, as shown by this price sensitivity index, are at their wits' end when it comes to dealing with prices that are higher than expected. And so there's going to be just a lot less tolerance there. Interesting. Well, the last thing I wanted to ask you before we head out is about inflation expectations. I know you were looking at those numbers today. We've been talking about how consumers feel about the economy, the upside risk to inflation. We should get the CPI print later today. But what's going on in the world of inflation expectations?
Um, Yes, so I'll sort of tie this back to the tariffs discussion because as we've done our surveys since mid-December, one of the questions that we ask consumers, do you think that the companies will pass on the cost of tariffs over to you? And generally speaking, the answer is yes. The cost will be passed on to the consumer, which would make you think that consumers are then expecting a higher inflation in the future. On Monday, we had consumers' inflation expectations data come out from the New York Fed, and we've seen no change in that data. So the expectations stayed stable compared to the December data. And one of the reasons that perhaps this hasn't really been, we haven't seen as much increase or volatility in this data yet is that consumers still probably digesting, the new administration and what policies will take shape. The survey gets conducted throughout the month, so it can be that, consumers were potentially thinking these tariffs recommendations may not materialize as fast as one would think. So we definitely need to watch out for more of the data points coming out of that as new tariff recommendations take place. But so far with the New York Fed data, the consumers' inflation expectations for 1 year out, 3 years out, has pretty much been the same as December. Perhaps they're waiting to see enactment of these tariffs.
Yeah, and it's still to be seen if the tariffs are a bluff, at least somewhat. So maybe it's not completely irrational from consumers. We also see that from stock markets too, where maybe they don't fully believe that all of the tariffs in the full scope of it will go into effect. He did actually punt the tariffs from Mexico, or that were to be implemented on Mexico and Canada down the road another month. And so those might never actually go into effect the way that they were proposed. And so perhaps the price increases will be more targeted and not affect so many everyday goods and that top line level of inflation very much at all. So yeah, I think all of us just need a little bit more time to take it in, and so that could be why inflation expectations haven't really changed much. But we did see that University of Michigan one go up, so I guess it'll see. I guess we'll just have to see. Well, thanks so much, Deni. This has been a great conversation. We could talk about this all day.
Yes.
There's clearly a lot to talk about in this space. I am interested to see how the inflation numbers will come in for January and what new policies we will be facing in the next month. But hopefully those consumers hold on strong.
Exactly. Thank you. Thank you, Sophia.
Bye.
Bye.